But before we get started, I just want to do a little brief intro to say that this is our Get RIC Ready educational forum. We tend to do these educational forums regularly here at RIC, usually quarterly, and we do try and make this a national forum where our farm businesses, trusted advisors, and other people who help farmers to come along and ask questions. We've also looked at some of our challenges and potentially some pitfalls and pain points that some farmers might be facing with RIC loans. So we're trying to address some of those through our presentation today. So I'm Mel Monaco. I'm the Executive Manager of Public Affairs and Marketing here at RIC. I'm also a farmer. We have beef cattle and shedding sheep at our farm. And I've been with the RIC for almost 4 years. So like myself and others across RIC, most of us have farming backgrounds or have worked in agribusiness for a very long time. We tend to understand farming issues and obviously we're learning every day from our conversations that we're having from customers and trying to find ways that we can better connect with you and help you to understand more about RIC loans, eligibility, and then also how to apply. So in attendance today, we have farm businesses, trusted advisors, including accountants, financial providers and rural financial counsellors from right across Australia. Pleased to say we've got people from Northern Territory right down to Tasmania. So thanks so much for joining us. We're going to try and finish within the hour, but before we get started, I'd just like to do an acknowledgement of country. We're meeting here at the head office of RIC, Regional Investment Corporation in Orange in central west of New South Wales, which is on Wiradjuri country. We acknowledge that attendees from the various lands across Australia are actually joining us today. So RIC acknowledges the traditional owners and custodians of country throughout Australia. We acknowledge their continuing connection to land, sea and community, and we pay our respects to the people, the cultures, the elders, past, present and emerging. So welcome today. Our webinar is based around, what you need to do before you apply for a RIC loan, the key purpose of RIC and why we exist, and the uses and eligibility criteria. This webinar is designed to be an instructional guide for you and will share information to help you understand where to find helpful tools before you apply and how to apply for a RIC loan. So our agenda today, we have two of our very experienced and passionate agri-lending specialists in Daisy May Denny, who's joining us, and also Mitch Adaman. They'll take us through what you need to know to get RIC ready. These include the key steps to take before you apply, during the application, and how our team works with applicants from the time you press the submit button right through until assessment, decisioning, and then also to settlement where you'll get your funding. We'll cover off some of the challenges or pain points, as I've mentioned. And we're also pleased to have our rural financial counsellors from Southern Queensland and Western Victoria joining us to share their experiences when applying for a RIC loan. So I'm sure you'll also be aware we do a panel discussion with lots of Q&As. Many of you have actually submitted questions before the forum and we'll try and address those throughout the presentation. But if there's something pops up throughout the forum that you're interested in, us, having a conversation about through this forum, please add it and I'll let you know how we do that as we go on. So within our team today, I'll introduce Daisy May Denny. She's from the RIC team. Daisy started out as an ag economist with the Department of Primary Industries in Central Queensland. She's working in grazing and economics, and then she moved into agri-finance industry working for NAB in Rockhampton, and then she joined the RIC team about 2 or 3 years ago. And then joining us also for the panel discussion and to help answer your questions will be Mitch Adaman. Mitch has been assessing loans within the RIC team for about 6 years, and prior to RIC, Mitch spent over 30 years in agribusiness banking and also the finance industry. We are very fortunate to have Mitch and Daisy as part of the RIC Agri-Lending Specialist team, and I'm sure you'll find a lot of their tips and tricks about RIC loans worthwhile today. I'd also like to extend a warm welcome to our rural financial counselling team. So we have Rural Financial Counselling Service from Southeast Queensland. and we have Kath Clark from Queensland, and also Sarah Moncrief, who is with Finwell Support in Victoria. So both bring a wealth of experience with what they do. So I'll let them introduce themselves as we get started. So I'll just start by giving a brief overview of RIC. Many of you may know RIC. You may have done some online research already or had conversations with some of your trusted advisors or your accountants or even your bankers to know who we are and what we do. But a few key points just to set us off is, we are actually a program which is national. We're an always-on program delivered on behalf of the Australian government. We are concessional lending, so we do loans, and we do loans not for everyone, but for only eligible farm businesses and farm-related small businesses. And we do have eligibility criteria attached to our loans. So a big part of today will be looking at that and going through that sort of thing. Our purpose is to give breathing space to help manage through significant financial impacts outside of a farmer's control, whether that be drought, natural disaster, biosecurity risk. We also have loans that help new farmers establish a first farming business or support with succession plans. So we've actually got over 3,600 loans approved since we started back in July 2018, which is worth $3.8 billion out to farmers nationally. For this financial year, we have $333 million allocated, and an additional $1 billion over the next 3 years has been allocated by the Prime Minister, and he announced that at the last Bush Summit last year. We're really pleased and delighted that we've managed to save $432 million in interest for Australian farmers that they can actually use to put back directly into their business to help keep them viable and build resilience and manage their risk longer term. The loan uses are there on the screen. I won't go through all of them, but the primary one and what we're seeing is that farmers are using our loans to refinance debt, reduce their interest repayments, and improving cash flow. There's a variety of reasons and uses for our loans, so we will go through those with you very soon. So the other key point I just wanted to make, and Daisy will talk about this as well, is that RIC loans have actually been set up to complement our commercial lenders, whether they're bankers or other financial providers. We don't compete with them. So having existing commercial debt is actually a requirement of a RIC loan, and that is a mandatory criteria that you must have before you can actually be approved for funding with us. So it is important to talk to your commercial lender very early and be upfront about your intention to apply for a RIC loan. This will actually help provide a much smoother loan process for you and will actually help us to do our jobs as well. So yeah, just wanted to make that point, but I might hand over to Daisy now to help you get RIC ready. Thank you.
Thanks, Mel, and welcome everyone. And as one of the agri-lending specialists working on preparing new RIC applications for assessment across Australia, I'm going to give you a brief overview of the RIC loans that we have on offer, some of our key points and challenges for eligibility, and an overview of the application pathway that we follow. So first of all, our RIC loans, our suite of loan products offered at the moment have two main themes. First of all, we've got 5 products that are targeted at farm businesses that have been impacted by something outside of their control. And then we have one other product that's intended to support new farming entrants or successors to a farm business. One thing that remains consistent across all of our products is the RIC interest rate. It's set by the Australian government and is reviewed every 6 months, with any change coming into effect in February and August each year. Currently, that rate's at 5.71%. As of the last August. So first of all, I'll start with our Agri Starter product. This one's offered up to $2 million, and it's that product that's supporting either some sort of succession activity within the business or for our new or recent farming entrants. The key with this product is that you don't have to have financial impact like our other products, but you do need to be able to demonstrate that genuine need for a concessional loan in your business. And often this one's used to help purchase that first farm, purchase stock for your first farm, equipment, all those sorts of things. For refinance, working capital and CapEx are all valid reasons for the AgriStarter product. So our first product I'll talk about with those that have been impacted by something is our farm investment loan. This one is offered up to 2 million as well and is for those businesses that have had severe impacts outside of their control. And this could be, the likes of flood, fire, market closures, or biosecurity impacts to the farm. The key with this is that across the last 5 years, you've got to demonstrate 2 years of impact. So, and that also, it can be current and projected years. It doesn't all have to be historically in the last 5 years. The next one I'll talk about is our drought loan, offered up to $2 million. This one's offered for people to prepare for, manage through, or recover from drought. Again, for this one, we need to demonstrate that impact of 2 years within the last 5 years. Again, it can be current and projected. It doesn't all have to be historical. But for our drought loan, we do need to see that you've managed through drought for at least 12 months to be eligible. The AgBiz drought loan is a little bit different because it's not targeted at our farmers. It's targeted at farm-related small businesses. So offered up to $500,000. We're looking at those businesses that have been directly impacted by the fact that drought has caused a downturn in their community. So perhaps that's grain or livestock transport, harvesting, shearing, those sorts of agricultural support businesses. The two newest products that we now offer that have both launched this year is our drought hardship loan. This one's targeted at supporting eligible farm businesses that have been managing through drought for the last 2 years and expect those impacts to be ongoing for a further 12 months. Another difference with this loan is that it's only offered for working capital, up to $250,000. So we can't use this one for refinance like the other loans. You might be wanting to use it to pay for your operating costs, buying fodder or carting water, or maybe covering your transport costs. This one's offered for a 5-year term, and it is no repayments in the first 2 years. And during this time, the interest is capitalised. So from year 3 to 5, you're making P&I repayments with a balloon at the end. With the drought hardship loan as well, it can be sought in addition to other RIC loans. So if you already have the maximum $2 million farm investment loan, for instance, you're still able to apply for a drought hardship loan if you meet the eligibility criteria in other ways. The last loan we offer is the marine recovery loan, our most recent loan. This one's targeted at aquaculture or wild catch fishing businesses that have been impacted particularly by the South Australian algal bloom starting March 25. So this one's offered for refinance, working capital or CapEx purposes, up to $250,000 over the 10-year term with that 5 years interest only. Now I'd urge you all to, that's just a very brief outline of all of the loans that we currently offer. And there is a myriad of information across our website on all of them if you want to know more. I'll jump right into getting into some of those key eligibility points that will help you understand if a RIC loan is right for you. So first of all, one we get lots of questions about is this financial need. So as I said earlier, it's that 2 years of impact can be 1 year actual, one projected within the last 5 years. And how do you show this to us? So when we're doing our RIC application, we collect things like your financials, tax returns, livestock schedules. You might provide your historical yields or next few months cash flow budget. So all of these documents, they contribute to being able to demonstrate that financial impact to your business. So perhaps with the last few years being dry, you've destocked for drought, and that's evident in your livestock schedules. And then as far as future impact, you've then got to retain stock and reduce your future sales, or you've got to financially outlay capital to buy in stock all of which are impacting your business. Perhaps you're saying you've had reduced impact from failed or impacted yields of your crops, or you've been unable to plant at all. That's another reason for showing that significant financial impact, and then we can see that in your financial statements. Or perhaps if it's this year, there might be management accounts or bank statements where we can see that coming through. If you're saying you've had increased expenses, again, looking at those financial statements, management accounts, you might have increased expenses due to your, flooding damage to crops, increasing your, herbicide, pesticide requirements. You might have had damage to infrastructure, that you've had to replace infrastructure, or increased animal health costs. All of these things are all relevant for demonstrating that impact to your business. Conversely to this, sometimes with financial need, RIC loans, as Mel said, aren't for everyone, and sometimes applicants can actually be too strong. And with this, don't self-assess. If you think you might be a bit borderline, go ahead or talk to us. But generally, when you're too strong, it's really that you're just characterized by year in, year out profits, strong equity, farm management. You might have significant farm management deposits or off-farm assets that you can access to support your business. The next thing that we look at is commercial bank debt. So 50% of your total term debt must be with the bank at the time of the RIC loan settlement. For example, if you are applying for a $2 million RIC loan and the purpose of that is refinance, then when you apply for the RIC loan, you would need $4 million at the bank if $2 million of that is going to be refinanced to RIC, and then you have $2 million remaining at settlement. If you're applying for a $250,000 working capital loan with RIC, that means you just need to have $250,000 at the bank at settlement. So your total debt will actually increase. And along the way, we can do a mix of purposes in your RIC loan. Just talk to your agri-lending specialist if you're not sure how all that works. We do take security for our loans, just like the bank. We need to have sufficient security. Sometimes that means sharing this with the commercial bank. Sometimes we don't need to share. But that's where it is essential to have their support and buy-in from early on. And we'll talk to them during that process. You do need to demonstrate a capacity to repay the loan. We do this with your financial assessment on a year in, year out basis. So not based on where you've been impacted. We look at what's a normal year, not a big bumper year where everything's amazing, just a normal year for the business. We need to be able to demonstrate that you're viable over the long term under those circumstances. And that means meeting your commitments on a P&I basis, maintaining your assets, and providing sufficient drawings for the operators and whoever the business is supporting. The last one I'll mention here is we do require one person in the farm business to be earning at least half of their income and contributing 75% of their labour to the farm. We are aiming to support farmers. And for the agri-starter, that is 50% of their labour. And with that particular criteria, we do understand that sometimes at the time of the application, if you're impacted or just starting the farm, that might look different. You just need to be able to show that transition to that across the life of the RIC loan as to what that normal will look like. Some common challenges that our applicants face with their application and bringing it through, being eligible and bringing it through to a full decision is, first of all, just misunderstanding our eligibility. If you don't feel like you get something, don't give up or just rule yourself out. Give us a call and talk about it, or talk to your trusted advisor. The RFCs are also highly knowledgeable about the RIC loans and often help many of their customers with applying for them. Sometimes it's insufficient commercial debt. So with the commercial debt, that means it's basically what doesn't count as commercial debt is things like consumer lending, so home loans, personal loans, these sorts of things. So we need something that has a commercial lending arrangement in place and often has security and commercial terms. If you're not sure, if that qualifies, give us a call and we'll have a look at what that situation is. A big hiccup with getting applications completed is not receiving all the documentation that we actually need. So make sure when you submit your application, you've got the 3 initial documents that we need, which is your cash flow budget, your financial statements, and your statement of position. That will help us ensure that initially you've got the commercial debt, you have got security for the loan, and you've got a financial impact. And, if we're not seeing any of that evident, we won't put you through the rest. But if that's all looking good, that's when we'll expect, we'll talk to you more, understand your business more, and get more of the documentation we need for a full assessment. As I said, yes, we do need security, just like the commercial bank will, and often we'll need to share that with the commercial bank. If you have a sort of a difficult situation with your labour and income test, like, it's not looking like it normally does at the moment, don't rule yourself out. It's all just about demonstrating what normal will look like in future. If you're working fully off farm and have been for the last few years to save up for buying your first farm, that's all good for demonstrating, your ability and your willingness, which is all important, especially for our agri starters. And furthermore, it'll demonstrate that as you move fully onto the farm, you'll have the capacity to stock it, all of that stuff, and meet the labour income test in future. I won't go through this one again with the financial need and off-farm assets. We spoke about that before. And I'll just finish off with, all along the way for this application process, if you're responsive, it's going to help us get this done so much quicker for you. And that includes both yourself and the bank. When we get in touch with you with questions and wanting more documents, it's all because we're trying to put together the best assessment possible to get you the result that you want. That's all of that. Now, I'll come back to commercial debt, as this does stump up a lot of us. So when we look at commercial debt, it's something that has commercial terms, a formal loan agreement, and security. So the reason we need this is that, as Mel said, RIC loans are designed to work alongside your commercial lender and not replace the commercial lender. We want to send you back to the commercial bank at the end of the RIC loan term, or whenever is appropriate for your business, in a stronger position than before. RIC's there to support that time of hardship, and that's why we do need you to have that relationship with the lender. Now, when you apply for the RIC loan, you don't necessarily have to have the commercial debt already in place and drawn down, but when it comes to settling the loan, we do need that to be drawn down. So if you're applying for RIC and you haven't started an application with the bank, then that probably, we won't be able to proceed very much with that application. But if you've already got perhaps a pre-approval or something subject to a RIC loan or an application in process for our agri starters, perhaps looking at buying property, then we can potentially work on that RIC application at the time, and then maybe have a concurrent settlement at the end, and so that both RIC and the bank then have the right amount of debt in place. When it comes to what counts as commercial debt, sometimes we can still count private or family loans as commercial debt, but again, it's just about understanding that the terms the loan are on are commercial, and there is security in place for that loan. And if you're not sure, get in touch with us early, and we can have a look at your situation. Some common questions. So, how much can I borrow with the RIC? So this entirely depends on the product that you're applying for. For example, the $2 million across the agri starters, the agri starters, the farm investment, and the drought loan, and that's reduced for some of the others. But also, as I've just said, it depends on how much commercial debt you have in place. So again, it's very situationally dependent. And just have a good read of the guidelines and have a talk to us to understand how much you can borrow based on your business. Does livestock count as security? Yes, we can take livestock as security in some cases. Sometimes it's more often used in those agri-starter scenarios where there may not be as much other security. But again, the property security is, quite often essential, but it's always a case-by-case basis as far as the security types that we take and what's appropriate for your application. As far as being in a drought declared area, no, this isn't a requirement. And when we're demonstrating the financial impact, we look at your personal situation and the evidence that you can provide to us in the form of those financial records, livestock schedules, yields, rainfall records, whatever it is that demonstrates your impact. That's how we assess the impact for your application and deem it eligible or not. Is a house mortgage, equipment leases, or personal loans commercial debt? So any consumer lending is definitely not considered commercial debt, being the house mortgages or personal loans. Equipment leases are generally not considered commercial debt. The only exceptions to this particular ruling is for our marine recovery loan and our AgBiz drought loan, where we can accept equipment leases. We have a brief overview here of our RIC loan application pathway. So starting with preparing for your RIC loan, highly recommend that you jump on the website, do our little quick quiz, look at all the documents and resources that are available to you on there. The full guidelines that we assess a loan based on, they're all posted on our website. And when in doubt, call us to talk about your situation. If you decide, yes, you're going to apply for a RIC loan, also get onto your bank and let them know, because that is really going to help speed things up along the way if they're already aware of that happening. When you start your application, it's very easy to do this on our website. And if the website's not for you, you can call the contact centre and they'll help you through submitting a paper application as well via email. When you submit the application, we do need 3 documents up front that are mandatory to assess it. That's your year in, year out cash flow budget, your 3 years of financial statements, and your statement of position. If we don't have them, it's really hard to get that gauge on whether you're sort of initially eligible to proceed with the RIC application. So highly recommend that you get on. We've got templates on our website as well for those documents if you don't already have them. So that can help guide you through it. Once you submit your application with us, it'll be picked up by someone like me, one of the agri and lending specialists. We'll look at all those documents and we'll give you a call and talk about what we're seeing and how the application's looking initially. As we get into it, if you're meeting those, criteria like, yes, we can see you've got your eligible debt, you've got your financial need, and you've got security, then we'll start looking at the rest of things. So there's a document checklist on the website which lists a lot of the other documents that we'll end up needing, like your tax returns, bank statements. We'll need identification documents on trust deeds. As we work through your application, it's really important that you're responsive when we have questions and further documents that are required, because that is really going to help along the way with this time to your loan to be decisioned. So at the moment on the website, the current time to decision and that for the last few months is all posted on there live. So you can go in and have a look and see how long it's all been taking. But really the biggest thing that comes into this is the individual circumstances of your operation and the overall complexity. They're big factors in how long it takes us to put together an application. and prepare it for assessment. The other big thing would be the bank. If they weren't aware, or if they're, you know, a bit not very timely with their responses to us, that can also make things drag out a little bit. And sometimes with valuations, we really try our best to keep the cost down for you all, and use where possible either existing valuations you might have that are fairly recent, or use our internal valuer. We do our best to do that, which they don't have a cost to you, but in some occasions, you know, there may need to be a professional val completed, which can take some time. Usually that may only happen for the specialised enterprises. Once your loan is decisioned, we'll communicate that to you, whether that's, if it's eligible and approved, then we work from there through the checking stages and preparing your loan for settlement with documentation. And if that happens to be a decline, we'll give you all the resources and information that you need to appeal the decision if you wish to do so. With loan settlement, again, keep in mind that keep your bank aware of what's going on, because we will have spoken to them during the application process to negotiate any deed of priorities and sharing security, anything like that that may have been required. But they also need to do their own application if we're sharing security. So make sure they know what's going on. Otherwise, it can create lengthy delays down the other end as we try to book in settlement with the bank if they weren't aware. Once we get our documents together, we'll post them out to you, and some of them are also now digital. So, you know, as timely as you can be with getting them signed and returned will all help things move smoothly towards a settlement between us and yourselves and the bank. Some of our top tips, and it's all things you've heard before, to improve, you know, the timeframe around decision and funding. It's basically just being responsive and making sure that you are prepared with the documents, and that if you've read the resources, it won't be a surprise what we need. Be readily available when we try to, you know, call you or email you. We really are just trying to prepare your application as best as possible for a quick and fair result. Get the support from the bankers early on, especially when we need to have a deed of priority in place and share security. And then lastly, make sure you do return those documents as soon as possible. Lastly, before I hand back to Mel, there's just a slide there on the additional support options that are offered by the federal government. You can access them in addition to RIC loans or without having a RIC loan. There's just other options for you there, as well as there's other state-based lending programs. And the RFCs would know a lot about that, which is a good segue. Back to you, Mel.
Thank you very much, Daisy. That was a lot of information, but all very valuable, and you know, a wealth of information there. And I just want to remind people that our website is a resource for you as well. Please use that, especially the before you apply section. It has all the helpful checklists, information, even a very simple eligibility checker tool, which you can run through. And if there are still points that you don't quite understand or how it works with your business, please feel free to lodge a call back, and someone from our friendly team will call you at your convenience. So now we're going to move on to the Rural Financial Counselling Service and the valuable work that they provide. We work very closely here at RIC with this team. It is a national team, and I've just wanted to put up this slide just to show you that there is a group probably somewhere near you in your state or in your region, and the phone number's there, but that can actually be found online as well if you want to call the service directly. So I might hand over now directly to Sarah will join us first. I just wanted to do a little intro for Sarah. Sarah is actually the Financial Counsellor Coordinator for Finwell Support within the Rural Financial Counselling Service in Vic West. Sarah has been helping farm businesses in her role as a financial counsellor and then as a coordinator for 10 years. And on top of this, she has had 20 years as a financial planner, specialising in succession. And following Sarah, we'll also hear from Kath Clark. So Kath is a rural financial counsellor from southern Queensland based in Bundaberg. She supports primary producers in Gladstone, Bundaberg and the surrounding regions. And after working within the banking sector for a number of years as a personal lender and then moving into bookkeeping, she's also worked in financial management for rural businesses. Kath has first-hand knowledge and issues facing primary producers. So we're super excited to have you both here to share your experiences and wealth of knowledge with everyone. So I'll hand over to you. Thank you.
Thanks very much, Melanie, and a great overview there too, Daisy. So thanks for having me come along today and have a chat. I guess I'm going to focus on this one slide that we've got in front of us right now, and just, I guess, reflect on the findings or what we see happen on the ground, and the learnings that can be taken to try and get a more successful or a application completed so that it can be assessed by RIC. So often people think that there needs to be just one event to be able to apply for RIC, but often it can be more than one event. It can be environmental impacts such as drought, flood or fire. It can be a combination of those natural events over a number of years. I know some regions have been impacted by all three. It can be financial strain, which can be compounded by increased feed and input costs, reduced production, higher interest costs, or changing commodity prices. I think the important thing is being able to clearly explain what's happened, when it happened, and how it affected the financial position of the business. Where possible, the numbers should support the story that you're putting forward in your application. I know that Daisy's already touched on this. Talking to your bank early, I'd really emphasise the importance of early and clear communication with your existing lender. Your bank is a really integral part of the RIC process, and they'll ultimately be aware of if your application is successful. So having a conversation early means that they understand what you're trying to achieve and they can help provide any information or support that's required from their end. Good communication up front can help avoid unnecessary delays or surprises later in the process as it unfolds. An RFC can also help you prepare for those conversations with the bank as well, just so that the bank does clearly understand what your intent is by applying for a RIC loan. Now, farming business structures. They can be very complicated. You can have companies, trusts, partnerships, different land ownerships, different family members across different entities. We have got a lot of experience in helping simplifying this a little bit with diagrams and flowcharts. Often we can work alongside your accountant and yourselves to try and piece together how the business is structured and how that entity looks. It does make it so much easier when it falls in the hands of RIC, if they can clearly understand how your business is set up and what structures you've got in place, because they can be complicated. Another big tip is I wouldn't anticipate completing an application in one sitting. I know even with our experienced rural financial counsellors, often it takes multiple appointments with a client to get from the initial stages of thinking about applying through to when you're actually lodging an application with RIC. You know, you want to dot the I's, cross the T's, you want to give them as much information as you can. And I guess, you know, the RFCs are doing these applications quite a lot. They do see the outcomes of the applications that they're providing for their clients. So they can be a really good reference point just because they've got experience in that space and they have the time to be able to come and work through it with you. And look, sometimes it can take a couple of weeks to get your information together and your application in a state where you're ready to hit that send or submit button. Backing up what seasonal conditions you've experienced, if it is the seasonal conditions that are putting you forward for your application with RIC. Farmers know what the season's like because they've lived it day in, day out. Potentially someone sitting on the assessing side of the application may not have experienced what that farmer has in their space. So where possible, get your local rainfall charts, get any climate information or any other seasonal data to demonstrate and support the conditions that you've experienced and that you're putting forward on your application form. It really does support it and gives hard information as to what you've been going through and the impact that that's had on your enterprise. Keep your forecasts realistic. This one I think is really important. When forecasting forward, credibility, I think, is more valuable than optimism. You've got to be really realistic about your carrying capacity, conception rates, yields, commodity prices. We often look at different scenarios with our clients when we're preparing the financial forecast. What happens if production doesn't recover as quickly as expected or the price changes? You don't want a cash flow where everything has to go perfectly for the numbers to work. You need to be realistic. So for me, all of this comes back to knowing your business and being able to tell its financial story really clearly, what happened, where you are today, and what a realistic future looks like. Putting all this together can sometimes be overwhelming. So engaging with an RFC early can be really beneficial for someone wanting to go down the RIC loan application road. Happy to hand over to Kath.
Thanks, Sarah. So adding on to what Sarah said, so the rural financial counsellors can really help to optimise the assessment process. I found that when we do an application, gathering all the supporting data and information that we can add in to the application. So that can be things like printing out the BOM rainfall data. If you've had an event like a hail event or something that may not have actually been recorded on the BOM, providing that supporting documentation. So that could be a newspaper article, it could be photographs that you've taken that actually show the impact or loss to your enterprise. If you're producing something that's not cows or sheep, which the RIC assessors would see all the time, if you've got a different type of crop, so if you've got rock melons or a nut variety or something slightly different, don't be afraid to provide information about that specific crop. So whether it's a crop data sheet, if there's some test data that you have available on your crop that you're growing, whether it's a high yielding variety or an early yielding variety, which may affect how your cash flow goes, don't be afraid to put those sorts of information in. The more information the assessor has, the easier it will potentially be for them to approve it if it's something slightly out of the norm. The other thing is your farm is unique and every production outcome is unique for that farm. So if you are using a different type of method or doing things in a slightly different way, don't be afraid to tell the assessor. Your farm, you need to paint a picture about what you're doing. You've got to remember the assessor knows nothing about you or your business. And so the best way to get that across is to paint a picture. Give them information, give them lots of information and explain clearly what you're doing, what you're producing and what you're trying to achieve into the future. If, as Daisy did talk about earlier, one of the most important things in this process is to keep the assessor informed, provide them with the information they request as quickly as possible, just to keep things flowing. There are a number of stages in the process, so it can seem quite disjointed. So the quicker that you act and get the information back to the assessor, the quicker it's going to proceed. Once you actually get through that first eligibility check, there will be further documentation that is requested. So there is a document that can be found online. It's the RIC loan application document checklist, which actually sets everything out clearly about what you need to provide, because there are quite a few documents that you will need after you've got that initial eligibility check. That's where, again, I think the rural financial counsellors come into their own, because they're there to help you through that process, because there are numerous statements that have to be provided, identification has to be obtained, and we can take you through and make sure that you check all those things off as you go and make that process easier. So yeah, there's some of the tips that I have to help the assessment process and hopefully get you through to getting a fully settled RIC loan as quickly as possible. Back to you, Mel.
Fantastic. Thank you so much, Sarah and Kath. Now, I just want to recap that the Rural Financial Counselling Service is an Australian government program that provides free, confidential, independent financial counselling to farmers and small businesses at risk of financial hardship. So their services are available, and they are a national program, so readily available if you need that support. So we're just going to move now on to our Get RIC Ready panel session. So I'll invite Kath and Sarah to keep their cameras on and invite Daisy to rejoin us, and Mitch Adamant's going to join us as well for the panel session and will help to answer your questions. Many of you have popped in some questions already before the session, so we have those, but if you have any questions that have been sparked from what you've heard today, please use the Q&A icon that's in your navigation bar. This is available if you're on desktop. If you're on mobile, unfortunately, you might not be able to access that icon. However, we do have our contact centre and also email there available if you wanted to talk to someone directly about your individual situation. So I might start with you, Kath, since you've had the microphone. Now, I just wanted to chat about Southeast Queensland and what you're seeing come across your desk. We understand that area is starting to become quite dry and experiencing dry conditions. There may have been some recent rain, but yeah, just what are you seeing in your neck of the woods?
Yeah, Mel, well, we've got 4 sort of drought declared regions at the moment, and obviously we don't necessarily have to have that to apply for a RIC drought loan, but there are drying conditions in the Southern Downs areas. So generally it's been quite a mild winter we've found so far in the southeast. However, obviously the greatest concern is the forecast for an El Nino and the drying conditions. So they're things that are starting to crop up. Obviously, the high diesel price and some other impacts from fertiliser costs and that sort of thing are also impacting operating costs. But you know, generally it's been a relatively stable period. We've had a couple of disasters. So we've had flooding in the Bundaberg area recently, but overall it's been a fairly mild winter, but just obviously there is concern going forward about the drying conditions. So
yes, so I suppose that's a catalyst as well. If you are starting to see the weather turning, we know that drought, there is a cycle, and RIC loans are there for preparedness as well as managing through and recovery. So if you're starting to see that and you have had other impacts, like you're saying, that could be time to start a conversation, time to start thinking about, you know, what do I need to potentially apply for a RIC loan to have that as part of your strategy. Can I just ask you then, Kath, like how important is it to know all your numbers and demonstrate that as part of your application for a RIC loan?
So that's really vital. You've got to know your business to be able to put together cash flows, and that's where obviously you can work with a rural financial counsellor if you're not completely across it, and we can help develop realistic cash flow projections going forward. Obviously, we do analyse your prior history and your previous performance, so that also helps inform us about how your business operates. Traditionally, people who've been operating for a length of time, they're usually got fairly consistent expenses. So we can use that information from prior performance to inform, you know, how things are going to go forward, and obviously adjust for if there's a change in commodity price, or if you have lost a crop, or if there's been some sort of impact, or you know that you are going into a drought period, or you haven't been able to plant your winter crops, for example, that you know you're going to have a cash flow shortage, and we can adjust and make adjustments in those cash flow forecasts. And then, of course, also look at not just the immediate impact, but then the longer term year in, year out figures that would be needed for a RIC loan, for example.
Yeah, okay, no, that's very valuable. And Sarah, I'll bring you in because your area has had prolonged drought for a long time, but I believe you've had some rainfall there. When should a business reach out to a rural financial counselling service for help and support.
One word there, early, would be my suggestion. I think if you're experiencing any, or again, if you have a look at, I guess, the wording around RFC, at risk of hardship as well. So when things start getting tough, we often see people going, oh, next month it'll be all right. The milk check will be coming in. I'll clear the creditors then, or I'll talk to the bank later. The longer you prolong it, the harder it's actually going to be to try and get a plan in place that's going to help you recover. We've had really, we've been impacted by quite a few different natural disasters in this neck of the woods. So obviously we've been extremely dry for now a long period. But our region's also been impacted by fires and flooding as well over the last few years. We've had the perfect storm down here. And the flow-on impact of that is huge. Particularly if you have one natural disaster after another, you think you're going to get back on track. But if you get hit by a second disaster, and it doesn't even have to be a natural disaster, it can actually be something that's just happening in the farming property. It can be illness or injury to one of the key people in the business, or it takes someone out of the business that can have a massive financial impact as well. So look, we really try and encourage people to reach out as early as they can, even if it's just to sit down and understand where they're at any point in time. They may not need, loads of assistance in dealing with banks and creditors and looking at RIC and looking at FHA to begin with. But just that understanding of where you're at and what you've got going on, in your paddock fencing, can help you make decisions and have a plan A, a plan B, and a plan C in place to move forward in a more comfortable manner. Too often than not, we get, we can be seen as a last port of call for people, and we get there and there's, the big pile of envelopes that haven't been opened. And it's really difficult. There's a lot of emotional strain that comes in that space as well. And farmers love farming. They usually prefer farming than they do prefer doing paperwork. So, if you can get someone in that can help you get that sorted and in order so you understand, it's helpful.
Yeah, and that's our role really, to help keep those viable farmers farming. There are lots of good farmers that can experience tough times. So that's why our services exist. So thank you. We've just had a question that's popped up in our chat from Andrew. Hi team, are RIC loans available for cyclone affected farms or horticultural farms? I might bring you in, Mitch, to help answer that.
Yeah, thanks, Mel, and thanks for the question. Most certainly, cyclones are an event outside of your control. And horticulture, yes, we certainly do horticulture, and we do horticulture around Kath's area and all over the country. So, yeah, short answer, yes. Long answer, yes.
Yes, excellent. And while I've got you, Mitch, I might ask this question from Alison from New South Wales and a similar one from David from Queensland. Are you able to apply for a RIC loan and other state-based programs? And Alison's also saying, I previously had a RIC loan. Can I reapply, or can I apply for an additional RIC loan? So that whole idea of state and federal concessional loan programs working together.
Look, if you've had a RIC loan before and you've paid it out, we have seen that a few times. Someone has actually sold their farm and then bought another farm in another geography of Australia, and then they've had a dry period. So certainly, if you've had a loan and you've paid it back, and then you go again and you have another significant financial impact, yes. But if you have currently a RIC loan, you may also be eligible for either a top-up. Your circumstances might have changed. You might have borrowed some more money from a commercial lender, which might have restricted you somewhat in your initial application. Or you might have had another a dry run, particularly we're doing a lot of drought hardship loans in South Australia at the moment for our existing clients. Now, when it comes to in conjunction with state-based lenders as well, it's probably hard to answer that in a general term, in a general sort of fashion, Mel. It's probably, that's more a case-by-case basis, but certainly you can have one of the state-based lenders in conjunction with us as well.
Yes, and I believe, yeah, up to $3 million you can borrow at a state and also a federal level. So there is that capacity there. Mitch, one more question for you, mainly relates to the commercial lenders and working with banks. John from Victoria is asking, we need funds to expand on-farm infrastructure, and obviously on-farm infrastructure can be a loan use. Obviously,
Yes.
we need to show eligibility, but this question is about our commercial bank is unlikely to want to share security. Can we refinance a $450,000 loan as part of a RIC loan?
Well, yeah, I did see that question come through before the webinar, and that situation of a commercial bank not wanting to share security, I'd say that's quite rare. Generally, the banks are very used to working with us, and it's to their advantage often because they take a first position on the mortgage, so we take the second mortgage, so that's to their advantage. But certainly the second or the third part of that question being the refinance component. With the exception of the drought hardship loan, all our other loans, that's an eligible use to refinance an existing portion of bank debt, just as long as Daisy said, at settlement, there's still the 50-50, at least 50% of the total term debt is with a commercial lender. Yeah. Yeah, no, good answer. And Daisy, I might bring you in now. So can a RIC loan be used to buy a farm property? So this is a question that's come from Dale from the Northern Territory. He's actually looking at buying a property in the Northern Territory.
Yes, so absolutely, yes. Buying a property is an acceptable loan use, and it sounds sort of like that might be potentially an agri starter looking to buy their first farm. And again, with that, it's just making sure that you've spoken to the bank and you're at least in the process of sorting out getting that commercial debt in place as well. Or maybe you've already got some anyway, because you might have loans for term debt that might have been used to purchase livestock that you might have already had on adjustment somewhere else in preparation for having your first farm. So yeah, absolutely, you can use the funds for buying a property.
Yeah, fantastic. Now we've probably got time for one more question before we need to wrap up, and we'll probably do a little survey as well for all the participants. But this question is one that comes up a fair bit, and it's come from Peter from South Australia. Daisy, you might be able to help, or maybe Mitch. And it links back to commercial debt, and I know that this is a challenge for many people, so that's why we've covered it quite extensively in this presentation. And we'll also look at doing an Agri-Starter webinar coming up in October, so we can provide more details to everyone on the line for that, because we can go into this a little bit further. But for first farmers, do they need a commercial debt before they apply, or can they demonstrate that they have the support of a commercial lender as part of the application? And that's come from Peter in South Australia.
Happy to take that, Mel. Ideally, we'd love a bank to have approved a loan, but that's often not the reality. As long as the applicant has taken steps to start talking to the bank and there's an application in progress. As I say, we prefer to see an approval, but sometimes that's not the case. So sometimes we might approve a loan subject to confirmation that the commercial lender has approved their loan. And in any case, when it comes to settlement, we'll need to see, and we might settle our loan at the same time as the commercial bank, particularly in the case of purchasing a first property for an agri-starter, as is this question. So we'll often settle simultaneously. That is, we'll throw in our money to enable the purchase. The bank will provide theirs at the same time at settlement.
Yeah. Excellent. And just one last question that's just popped in from Susie. Daisy, this one can be for you. Can you advise how far back, I suppose, how far forward can cash flow projections go out? Are you looking for 3 years or longer?
Well, the main thing we need is that budget that shows your year in, year out position. And often the cash flow, if you're trying to demonstrate, future impact, then you can provide cash flows from your current position showing future, moving towards reaching your year in, year out once again. There is no requirement for a certain number of years. And this is one of those cases where if we're looking at your application and we think that to demonstrate a certain eligibility requirement, we need to see some cash flows, we'll let you know if there's something that we're not seeing, and that if that would help, you can put that together for us. But no, there's no requirement for 3 or 5 or 2 years.
Yeah. Oh, excellent. Great to know. Well, we might need to wrap up our panel discussion there, and we'll just put on some RIC Ready tips that Mitch will cover off. But before we do, we've just popped up a poll. So we would appreciate if you could just give us some feedback on this webinar. That will help inform our next webinars. And as I said, we will be doing AgriStarter in October, and we know that there's a lot of interest for that product from first farmers and also people going through succession planning. But yeah, I'll just hand over to you, Mitch. And if we didn't get to your questions today, don't worry at all. Please just call our RIC team at the contact centre. They're more than happy to help you with any inquiries you have. So handing over to you, Mitch, to wrap us up.
Thanks, Mel. It'll be rapid fire here on the tips, but understand eligibility, go through the website, don't self-assess, give us a call, utilise all your advisors, RFCs, accountants, financial planner, even your bank. Contact your bank, advise them that you're applying for the loan and that we might be contacting them. Have your documents together. You only need 3 sets of documents for the application, but there will be further documentation such as ID down the track. Have that ready. Remember, it's a loan. We operate similar to a bank. So security, show viability, etc. And any questions, contact us or shoot us an email.
Fantastic.
Thanks, Mel.
Thank you. And thank you very much to all of our speakers today and for everyone for joining us and giving up your time to learn more about RIC loans. As we said, we're more than happy to help. Our team is more than happy to answer any of your questions and help guide you through RIC loans and help you with eligibility and how to apply. Thank you, Sarah and Kath, and thank you for the valuable work that you do and to helping farmers as well. So thank you. We'll see you next time. And we'll send you the recording as well. Thank you. Bye-bye.
Bye.